Alibaba has been a massive breakout stock in the last month, with it going from around $80 all the way up to the peak of around $146. Can we expect this stock to continue to break out? Well, intrinsically, I have this stock to still be undervalued, so I expect this to continue. Will it continue now, however? That is something that we will need to decide because, of course, now we are expecting to see a lot of short pressure. Before we get into this video, I'd like to say I'm not a financial advisor. This is not financial advice. If you could help support the channel by subscribing and liking this video, it would be greatly appreciated. With that being said, let's get straight into this analysis. So we can see that Alibaba currently has a PE ratio of 19.32 and an earnings per share of 6.86. And of course, we have seen a lot of growth in the past with this stock. Currently, I have Alibaba to be rated 17th on my breakout indicator, with it giving a score of 9.07, which suggests that there could be still more room for this stock to grow. This doesn't account for intrinsic growth, this just accounts for RSI, moving averages, ATR, and such the like. So we will do a deeper analysis to see whether or not there is more intrinsic growth. Spoiler alert, there is. But I would like to say that Alibaba, just because it has intrinsic growth doesn't mean that this stock will grow. It, of course, faces a lot of geopolitical sanctions now with the US. I know that Alibaba isn't primarily a US custom-based stock, so they won't be massively affected. But of course, it will always have an effect on Chinese stocks, no matter what the US says and vice versa. So if you are looking to get into the stock, you should always keep that in mind. Looking at the exponential moving averages here, we are obviously above all of them, ranging from the 20-day to the 200-day. And on a MACD indicator here, we can see that we are now in a long position and well and truly into this. Could we see momentum carry through for this stock and expect this to continue? Well, there is the potential for that. We are obviously looking as if this growth has slowed down massively in the last couple of weeks or days. This is purely just because a lot of short sellers are now starting to sell out, as this is quite a impact. This is quite a upgrade for Alibaba, of course, going from $80 all the way up to around 140 odd. So it's always going to be the case that we are going to see selling pressure, but can we expect to see this continue intrinsically? Well, now when we look at the intrinsic value, we can see the stock is still massively undervalued according to my system. And if you think, oh, this is just a really bullish system, this puts Palantir's valuation to be at $14 odd. So it's clearly not that bullish. So for this to say that Alibaba is really good suggests that this isn't just a one-off lucky dip. Essentially, we have a bullish intrinsic value here on the left of $233 and an acceptable buy price being at 174, which is obviously well above where we currently are. So that gives Alibaba a lot of bullish intrinsic room to grow into. But if we go on to the bearish, we can still see this as positive, with it only being $1 above where we currently are. This is really good in my mind. It says that we are now at a relatively fairly valued level. However, there is still room for a bit more growth in Alibaba, but that could essentially mean that we might see a bit of selling pressure in the stock in the near future. If we go in between these and go on the mean, we've got a intrinsic value of 183 and an acceptable buy price of 137. So this takes into account growth for this year, and this essentially is saying that for this year, by the end of 2025, we can expect this stock to be on the high end of 233 and on the low end of 133. For those of you that are new around here, this intrinsic value takes into account earnings per share and growth rate, which is provided by Yahoo Finance. And then from this, I also add in a mean surprise rate so we can understand where the analysts are going wrong. And looking at Peter Lynch's valuation here, we can see we get a result of 0.7, which suggests that the stock is overvalued. But I would personally be putting this stock at fairly valued currently, with a bit more room to grow, but not enough for you to really get into this. To say it's an early stage of getting in is quite a late stage now. And looking here on a discounted free cash flow analysis, we can see that in a 9-year basis, we can expect this stock, just based off of their free cash flow, which is really good, to be at $7,000, which might seem unrealistic, and it definitely is unrealistic. However, this just takes into account their free cash flow, which is quite outstanding. As we can see here, just down the bottom here, their free cash flow is just absolutely massive. If you want to see a video of me going deep into the financials for Alibaba, breaking down their financial reports, then do look at this video just above my head right now. But if you want me to save you some time, their financials are really good. Looking here on a 3-year growth, this essentially just divides the 9-year growth by 3, obviously. We can see that in 3 years' time, we should expect to see this stock to be intrinsically worth $2,362. So looking at what the analysts are thinking for Alibaba here on a 90-day projection, we are expecting a lot of volatility, which is often the case when you see a stock jump up this quickly. And on a buy rating, they are also rating this at a strong buy, with 29 analysts putting this at a strong buy, which is quite unprecedented. I don't think I've seen that many times before. And when we compare this to the sell, no analysts are currently putting Alibaba at a sell. So that is actually really positive. Again, I've rarely ever seen something that positive for a stock before. So when putting Alibaba down here on my stock tracker, we can see that they are ranked at a strong buy. If I move my webcam so it's a bit more obvious, they are ranked down here at a strong buy, with the PE obviously only being this high. I think there is a lot of room for growth in this stock. And when we compare my earlier on formula of breakout potential to its intrinsic value, we just get this stock to be ranked at a 10, which is the highest score, which you can't see. Here it is ranked at a 10, which is the highest score in which my system can give out for a good breakout stock, as we have a bullish breakout on intrinsic value, a undervalued on the discounted free cash flow 3 year, and on the PE obviously is bullish as well. So what does that tell us? That tells us realistically this stock should be going up and continue to go up. However, does that mean to say it will go up? Not necessarily. I think that potentially short term we could see this stock start to take a bit of a fall, as obviously it has jumped up such a massive amount in the last couple of weeks. So short term, we could be seeing a lot of bearish action and a lot of selling pressure. However, long term, if you were to hold this stock for a year, I think you will do very well out of it. But that could also be wrong. This could also have more buying pressure early on next week. I think it's all dependent on news with this stock now, how much positive news can come out for it, especially because their earnings are so far away, as they've just reported their earnings, which were, of course, really strong. So according to my systems, it's definitely a stock to be buying. With that being said, I'm going to end this video here. I hope you have enjoyed it and found it somewhat useful. Please do consider liking, subscribing and following my Twitter. It would be greatly appreciated. I'm not sure when this video will be out, as I will be in Hungary by the time this is out probably. So apologies if this has all changed. It shouldn't have realistically by the time this video is out. But I will see you for the next video.